Good afternoon and welcome back everyone to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, another day, another record high beckons, our equity markets. And clearly, if you look at the Nifty and Sensex, while they started off on a weak footing earlier in the day, but we have, remained near the day's high, if not at the day's high throughout the session, and largely on the back of very positive cues emerging out of Asian markets as well as European markets earlier in the day. If you look at where the major, core of this rally stands, that is clearly China and Hong Kong. Chinese and Hong Kong equities surged on anticipation that probably the ongoing protests that are happening there in China, in mainland China at least, they could possibly spur the Chinese government to ease controls on COVID policy. So clearly there is hope rally there, and that is percolating across the globe at this point of time. In terms of sectors which have led the rally today, FMCG, surprisingly a lot of gains there in a lot of FMCG stocks, and we're going to talk about one of those stocks later in the show. And metal stocks also, of course, driven by the China factor. Metal stocks were among the top gainers on both Nifty as well as Sensex. So it's clearly been a good day, Santo.
Well, yes, but once again I shall point out the fact that the broader market is not really participating, and unless you see participation from the broader market at some point, CJ, the rally is going to run out of steam. A handful of index stocks alone cannot keep pulling the market higher, CJ. Well,
yeah, surprisingly, I mean, if you look at the Nifty mid cap and Nifty small cap, actually, they're quite deep in the red today.
Exactly, my point. So if you don't have retail participation, or I don't know, maybe there's another structural change, retail participation perhaps doesn't matter.
Yeah, because institutional are coming back on board.
In a big way. So I guess that could be a major change. But then ultimately, how do the smart money get their exit?
Yeah.
Well, quick FNO cues. We're seeing long build-up in futures of Dabur, Bandhan Bank and Aditya Birla Capital, and build-up of short positions seen in Laurus Labs, ABB India and Granules.
Well, thank you for those FNO cues, Santo. Moving on, of course, 5 stocks that we usually talk about that are on our radar. And today, the first stock that we want to talk about is from the FMCG space, Santo.
Dabur, huge volumes there, in fact, and that seems to indicate that there could be a lot of blocks that may have changed hands today. The thing about Dabur is that it's been having a pretty ordinary run for a while now, but all of a sudden the huge jump, and it's almost on the verge of making a new 52-week high. Nothing has changed fundamentally really for Dabur at this point in time. The second quarter numbers were just in line with what market was expecting, but probably I think because there needs to be a story to justify some kind of a huge run. Players are talking about the Badshah acquisition, how it's going to be margin accretive for Dabur. In fact, the Dabur management itself had said that they're looking for synergies of close to about 2 percentage points from the acquisition, because there is a lot of commonality, almost 50% commonality in the raw materials that they buy for Badshah. The other trigger possibly could be that Dabur is setting up a huge plant in Indore. It's investing close to about 326 crores in that. And the management has said that it's aiming for revenues of close to about 900 crore from that in 2 years once the plant is commissioned. So that could be one of the triggers, and also the fact that the company is fortifying its position in the food segment. It's now getting into the carbonated soft drinks segment as well shortly. So a lot of triggers, none of it immediate at this point in time. The market is just looking for some stories. But the stock is well on its way to hit a new 50.
Well, Santo, I think another story is, of course, the launch of the D2C brand platform that they are looking at, Dabur Shop. I think that is something that also got the market excited at this point of time with respect to Dabur. But I think the move in Dabur also, I think, translates to the entire FMCG pack, because if you look at HUL, Tata Consumer, a lot of these stocks actually are sitting at pretty handsome gains of more than 2%, 3% in trade today. But with respect to Dabur, Santo, I think their larger exposure, of course, has been in the rural market. Now, we know after the second quarter, earnings, the commentary from the management on the rural market was not really that inspiring, and the patchy demand scenario in that market clearly remains an overhang as far as the Dabur is concerned. If you look at the year-on-year growth in the rural market for Dabur, that was barely 1%, whereas the urban market growth was around 6%, which is also not spectacular. I mean, there is no doubt about that 6% sort of growth is really not spectacular for the sort of valuations that a stock like Dabur commands at this point of time. And also, if you look at the consensus sales growth outlook, Santo, for Dabur for the next 2 years, that sits somewhere around 11.5 to 12% on a CAGR or annualized basis for the next 2 years. Now, 11.5% just does not, it's not an inspiring level of growth. I mean, I think India's nominal GDP may be able to outstrip Dabur's own sales growth at that level. So I don't think investors probably will be able to make as much money, or I mean, at least the sort of hype that the stock is getting today is suggesting. So for me, I think this is a stock that probably is doing good today. You have seen probably the best single day gains in the stock today in more than 2 years, according to the BSE data. But I think from a longer term perspective, I just don't see the stock probably outperforming the market in the way that there are other candidates out there in the listed space.
Well, the management has also said that it's had its volume growth was about 9% compounded for the last 3 years, and it will manage to sustain that in this year as well. Remember, there are a lot of fears that the margins would see a severe hit for not just for Dabur but for all FMCG companies, but those fears have really not played out. So one can always debate about the valuations, but things definitely not looking bleak for FMCG companies as one would have thought till a few months back.
Well, moving on, the first stock on my radar today is Aether Industries. Now, this is a stock, of course, after its listing has gone a little off the boil. If you look at the past 1 month's return, clearly not really that inspiring. I think the stock is underperforming the benchmark indices, and it's given negative returns in general since the past one and a half months. But yesterday actually, Investec, brokerage firm Investec came out with an initiation report on the stock, giving a buy call, a surprising buy call on the counter. They believe that Aether is gearing up for a very strong and profitable growth run over the next 3 to 4 years, and they're quite. I mean, although the company, in their opinion, has done quite well to scale up its sales, especially with EBITDA margins staying above the 28% band. But going ahead, they expect an acceleration because Aether is trying to diversify its businesses. It's focusing a lot more on R&D going ahead. The contract manufacturing side of the business is doing quite well. So clearly, there is a lot that, in terms of foundation that the management has laid out. And now Investec believes, Santo, that the foundation will result in very strong growth and earnings growth over the next 3 to 4 years for the stock.
Well, if it's a long-term story, well and good. But again, if you look at the last few quarters, growth has been kind of a little range bound. Now, the company did have a good run. If you look from 2019 onwards, the top line has almost tripled. There's been a fantastic growth. But also, CJ, what happens is when you have that kind of scorching pace, at some point, again, the base effect kicks into play, which is what we are seeing for Aether also at this point in time. Not the best of times for specialty chemicals overall. The market has been a little guarded. We've not seen any major sell-offs, but just some months back, you just mentioned specialty chemicals and everyone would be rushing in to buy. That optimism has certainly faded for the time being. And if you look at the first 6 months performance, financial performance, and then extrapolate it for the rest of the year, unless the company manages to do something spectacular in the next couple of quarters, we may not see even these valuations sustaining. Now, CJ, don't tell me that there could be the rainy season thing at play for the second quarter not being good when it comes to specialty chemicals.
No, I don't think so. I mean, of course, the quarterly performance recently has not been great, but if you zoom out a little bit, as you mentioned, sales have tripled for the company over the past 3 years, and that is clearly an indication that the management has been able to scale up its operation. And I think that is what Investec is betting on, that even if the current run rate continues for the next 3 to 4 years, clearly you're sitting on a hefty growth rate as far as earnings are concerned, given the fact that the company is enjoying margins in excess of 28% at this point of time. And I mean, God willing, if there is even improvement on margins as well, then clearly that is a very good scenario as far as Aether Industries is concerned.
Well, the market, as I said, the price action seems to suggest that the market is a bit cautious.
Yeah, at this point of time, it seems so, because of course it's been a newly listed company. It's made a very solid debut on the market. And I think since then, generally, you tend to see with IPOs which make a good debut, they go through these phases of consolidation. And it'll be interesting when this phase of consolidation ends and when the next re-rating begins for the stock.
Well, CEAT is the next stock on our watch list. Now, the management was on the channel this morning, and the key takeaways are that rubber prices have come off significantly, almost 15 rupees, 10 to 15 rupees per kg That's the kind of drop in rubber prices that we are seeing, and this also comes at a time when crude oil prices too have begun to cool off. So clearly you will see some kind of improvement in the margins in the quarter ahead. That apart, the company has said that typically Q3 the volume growth sequentially remains a little flattish, but in this case year on year there will be a huge solid double digit volume growth. More importantly, the company has also been able to take a price hike in the two-wheeler tire segment, and that shows some kind of pricing power, especially given the fact that the two-wheeler industry in general doesn't seem to be doing all that well. And as for the capex guidance, the company has said that it's sticking to its earlier estimate, that is 900 crore of capex, and out of which 750 crore is for project capex. And while the debt has gone up, the company expects the debt to rise by about 300 crore over the next couple of quarters. It's fairly comfortable with a debt to EBITDA ratio of 3 times, and it said that it will control capex in the fourth quarter. So margin improvement, I think that was the key play for CEAT, that margins being under pressure is one of the reasons the stock has not really been performing well for a while now, and it gets a lower discounting compared to somebody like a MRF. But once it gets the margin part of it right, then maybe the stock could still have some upsides.
Yeah, I think, Santo, one of the reasons why the stock is doing well today also in trade, of course, is the fact that there is hope that margins will improve for tire companies. It's not only about CEAT, the entire tire pack largely has seen a good run up in the past 2 to 3 weeks, largely down to the fact that crude oil prices have fallen quite substantially on a sequential basis, and you can see that in the effect on the rubber prices as well. Global rubber prices at this point of time touching a new 2-year low as we speak. So clearly there is hope for, or optimism as far as margins are concerned. But my caution also, stems from that only, Santo, because at this point of time, while crude oil prices are heading down, and therefore the recency bias would suggest that it will continue to keep falling, and we talked about it in the morning that some people are expecting oil to fall to almost $70 to $65 per barrel. But I think, as I said, argued in the morning, there is a good possibility that global crude oil prices could reverse, in the first half of 2023, or at least in the second half of 2023. So any sort of margin revival that the company might see, I think could only be a 1 quarter or 2 quarter phenomena as far as sequential, margin performance is concerned. Also, of course, two-wheeler company demand on the premium side has been quite good, and therefore, there has been decent amount of volume uptake for a lot of tire companies. But that demand also hinges on the fact that the demand environment or the economic growth remains solid in FY24. At this point of time, if you look at some of the multilateral agencies which have been coming out with growth outlook for India, they are clearly, downgrading India's growth. Also, there is fears of US recession, Europe recession, a China slowdown already underway. So in this sort of a global environment, there is no way that India can sustain more than 7% of growth rate. The growth rate will slow down, and that could also have an impact on volumes, although the plausibility at this point of time seems a little less. But this is a situation that investors should pay attention to as and when it materializes.
That's pretty some heavy duty economics out there, CJ. It went over my head.
Oh, well, for the first time I said something that went over your head. That said, last stock on my radar today, and one of the stocks within the pharma sector that were performing quite well, is Gland Pharma. Now the stock rose amid reports coming out of Bloomberg that the company's promoter, Fosun Pharmaceutical, or Fosun Group, they are looking to likely exit the company and sell their stake to private equity players, some of the private equity players who are very interested in taking up the company's stake. Now, the reason, I think a few weeks ago, Santo, we had touched upon the stock, when the stock had fallen about 10% in one single day after its earnings. We had touched upon one of the reasons why Fosun is looking to, why there was a fear that Fosun may sell its stake in the company, and that was because, the Chinese group is actually going through a lot of financial troubles. It's a little funny, but, the owner of that group, actually, Santo, was respectively called as the Warren Buffett of China, and it so has happened that now he is going through almost fears of a bankruptcy in China, and that is one of the reasons why Fosun is trying to cash in on a stake in Gland Pharma, which is worth close to $3 billion, $3.5 billion. Now, of course, if this overhang is taken away from Gland Pharma, then clearly, if you look at the fundamental business, that is quite solid. Gland Pharma is known for its injectable business, and that business will remain quite lucrative for any strategic investor, be it a private equity player or a venture capitalist or any other company, a major company in the Indian pharmaceutical space. So I would I would not, I will not be surprised if there are many takers who would be attracted to buy Gland Pharma, because this is just a company, which is waiting to be turned around, given the fact that the fundamentals and the management remain quite solid.
Well, again, the same thing which I had mentioned in the case of the Aether. Here also the sales after in the preceding years it had seen a very sharp run up, but since for almost 4 to 5 quarters now it's been stuck in a narrow range. Now, is it really due to the promoters being unable to invest in the business? That looks a little doubtful. Now, were that the case, then probably a change in ownership might solve the problem, but it doesn't seem to be that. I think Gland Pharma's problems are pretty much the same, which is hurting other pharma companies as well, to some extent price erosion in the US, although Gland Pharma is less subject to that kind of steep price erosion, given that it's in the injectables business. But that said, again, the numbers really have not kind of shown any strong growth for many quarters now, which could partly explain why the stock is down by almost 50% from its peak, and till yesterday it was on a almost one-way slide downhill, and today it's risen 7%, mainly on the back of this news. So I'm still a little skeptical. If you were to judge it purely by earnings at this point in time, if you look at the first half numbers, if you extrapolate it, then they're barely about meeting the the total numbers that the company had done for the previous year. So earnings wise, not a very pretty picture, but sentiment probably will may improve slightly, given that the presence of a stronger promoter, in the hope that that will really turn around things. But if you were to just look at earnings, I think, CJ, I'd still be a little cautious.
Yeah, I think, Santo, out of the 50% fall, you can probably attribute almost 20 to 25% of it down to the fact, the fears around the promoter selling out. And I think that is, if that fear is, taken away, I think clearly then the market can start focusing back on earnings. And yes, it is true that earnings performance was not really that great for, Gland Pharma in the second quarter as well. If you look at year-on-year number, it was bad across the board, from sales to operating profit, as well as margins and net profit. But I think the fundamental business for injectables in general remains quite good, because these are generally high margin products. Also, they have a good contract manufacturing business as well. So that is, a business that could probably do quite well. Whether their plans or their expansion in China continues or not, given that the Chinese promoter may exit, whether that continues or not will remain an interesting question, because a lot of investors were looking at that China business as a very lucrative business for Gland Pharma because of the inroad provided by Fosun Pharmaceuticals. So it will be, these are very interesting times for the stock, and I think from a tactical point of view, there could be something here for short-term traders.
Well, and last stock on a watch list is Dalmia Bharat. Now, the company has been seeing renewed interest despite the second quarter numbers being a little tepid. Jefferies is among the brokerage which is bullish on the cement sector in general, and it has retained its buy rating on Dalmia Bharat and also raised the target price to 2,060 rupees. Now, according to Jefferies, cement demand is expected to be very strong, and particularly in the eastern parts where Dalmia Bharat is the dominant player. And according to the brokerage, strong volume growth and also the cost leadership makes Dalmia Bharat one of the preferred picks in the mid-cap cement space.
Well, Sata, I'm not surprised, because I think cement space is clearly now getting a little bit of a, what do I say, a bit of a good outlook from a lot of investors. Clearly, when the entire Adani news broke out, there was a lot of negativity around this sector. But now I think a lot of investors, once that price correction is out of the way, they are now starting to see a lot of the fundamental side of the business. And clearly, from a fundamental point of view, and I have been talking about this point for the past 2 months, that the margin issue clearly gets resolved. I mean, if you saw the impact on margins in the second quarter, a lot of the companies did face quite a lot of shrinkage in margins in the second quarter. But I think going ahead with fuel costs coming down for a lot of the cement companies, I think that is where the margin pressure could be relieved. So that is one positive trigger. And also with the infrastructure spending of the government coming back, the construction season coming back, clearly there would be an uptick in domestic cement volume. So that also in the near term at least will be two good triggers. And the sector leaders commentary, if you look at Ultratech's commentary, they are very, very bullish as far as demand is concerned. And if it plays out even 90% of the way, that in itself will be quite healthy for the industry. So I can understand why a lot of the foreign brokerages probably have started looking at cement companies, because valuations at this point of time are very attractive. They are very reasonable after the correction, and clearly there is on the fundamental side triggers out there to result in some bit of re-rating.
And with that, let's take a quick check of the market. And at this point, both the Sensex and Nifty have been holding on to the early gains. Sensex is up by close to about 161 points, and the Nifty is up by close to about 50 points.
Yeah, but Santo, I think it's the mid and small cap space where the pain still remains. I think the Nifty mid cap index down about 0.5%, small cap index down about 0.7%. This is after, this seems like a reversal of yesterday's rally in both these segments. So clearly that will be a little bit of a negative, a little bit of a dampener for the market. India VIX, if you look at the VIX index, that is a little interesting because the VIX index, after starting off the day almost 3% lower, has actually now become flat. So clearly there has been an increase in demand for put options out there from traders, indicating that some traders are now starting to think whether after hitting record highs, maybe we are in for a little bit of a drawdown out there in the coming months. So yeah, interesting times, but clearly it's the benchmark or the large cap stocks who take the day away, and the small cap and mid cap stocks are the disappointment for a day today, Santo.
So CJ, key things to watch out for tomorrow.
Well, Santo, not something that is very critical, but of course today, of course, do watch out for the speech coming out from Bank of England's Chief Bailey. That will be something to watch out for later in the evening. Apart from that, you have the US consumer confidence data coming out in the evening. That is something that is usually sometimes tend to move market. And apart from that, tomorrow, of course, European Union or Eurozone's November CPI data will come out, and that will be also a critical data point in terms of gauging what the the ECB could do in terms of rate action going ahead. So those will be the key things to watch out for, three key things to watch out for, and yeah, interesting setup for tomorrow.
Well, and with that, we wrap up this edition of Markets with Santo and CJ. As always, thanks for watching and also sending in your queries.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And for all of your financial news and everything else, of course, there's only one place to be, that is moneycontrol.com. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.